Hello, this is Cesar. I'm an enroll agent. I help people take care of your U.S. tax obligations. Today, I'm going to be talking about FTX and possibly theft losses because of it. But first, I need to say that this is not tax advice or legal advice because everybody's special. If you have questions, please email me and we can talk about your specific situation. The first consultation is free, so you don't have to pay any money. So, if you click on this video, you know what FTX is, what it is, who is FBF. So I'm not gonna talk about those details, but if you have questions about it, then also send me an email. This screen probably will will explain what this is. So I decided to make a video about this because I do taxes. So I think in terms of taxes, when I heard that a lot of people might have lost their money through this vehicle, I'm thinking this could potentially be a tax deduction, potentially. Nothing is set in stone. I'm just giving my opinion as of now. And the reason is that back when Bailey Madoff did his scam, there was a lot of pressure from the accounting community, from investors, from taxpayers, from politicians, and the IRS issued some guidance to help people, recover some of the taxes they paid on gains they never really had. So there was a congressional hearing, and then the IRS issued guidance how to deal with losses you might have had with Bailey Madoff. And this is very similar. I'm not saying it's the same, but this is very similar. So I'm gonna explain, what that is. And by the way, I expect that by the time we have to file our taxes for tax year 2022, the IRS might, by that time, already given specific guidance on this issue. So these things will change more likely. All right, so I'll show you. So one of the guidance that the IRS issued was Revenue Ruling 2009-9. This is public record. You can find it online if you search for it. If you cannot find it, send me an email. I can send it to you. It's not a big deal. So this revenue ruling explain, what losses are and the rules that are applicable and so on. It's kind of dry, but you should read it. And basically, theft losses, personal losses were deductible before 2018, but between 2019 and 2025, personal losses, unfortunately, are not deductible unless you live in a federally declared disaster area. But investment losses might be deductible. So most people who invest in cryptocurrency, they invest because they want to make money, either because the crypto will increase in price or because they're gonna get some kind of regular income from it. So this falls into the category of investments/business losses. And back with Bailey Madoff, the IRS allowed deductions of these losses. So how does it work? So this ruling here, in addition to already existing IRS rules and regulations, says that you are allowed to deduct the loss in the year that you discover it. That's the summary of it. Of course, there is more to it. You need to make sure that you have all other things in order, but that's the essence of that. So that's this ruling. Of course, you had to kind of prove that there was a loss, and etc., etc. However, back when the Bailey Madoff scandal was happening, people say, okay, that's great, but it's gonna take years before we know the real extent of the theft. We don't know. Maybe we lost everything. Maybe we lost 50% or 80% or whatever. So what they did was they issued this safe harbor revenue procedure. Safe harbor means not 100%, but in a nutshell, no questions asked, as long as you are telling the truth. And this revenue procedure 2009-20 says, we're going to let you deduct 95% of the loss, even though we don't know exactly how much it's going to be. If later you find out that it was less, then you have to pay us the difference. If later you find out that it was more, you can take another loss later on. That's like the summary of it. But there is a keyword to use this safe harbor procedure. The lead figure has to be charged or indicted. And right now, SBF has not been charged or indicted. So if we go by the rules, the safe harbor is not available. The regular revenue ruling might be available, but there are a lot of analysis that goes into that. So I'm not saying you should go ahead and use the doc what you think you lost. Don't do that. Speak to a tax professional, myself, or somebody else, and tell them about this and see if you can potentially deduct it and if you should, because there's a lot of things that go into it. What works for somebody that may not work for another. All right. Let me show my information again, just in case. Here is my email. I'm gonna now go through an example. I have created this example to show you how it works. So this is a base example, and I enter some kind of income in there, and the loss is not being treated as a theft loss, but a capital loss, which does allow you some kind of deduction. But you end up paying $17,000 in taxes. That's if you are single with no other income except one and no dependents. So that's why I'm saying it's different for every. This is an example. It's not going to work for everybody. Like your amount might be higher or lower. The amount of taxes you have to pay. That's just to show you how it works. Then I have this other example with the theft loss. And you can see that at the end of the day, you only pay $500 of taxes. How does that work, right? So you need to file Form 4684. And there are some parts of the form that have to be filled, I'm sorry. We're claiming 95% of the loss. We're assuming the loss is 100,000 to make it easy. There are other details that go into it, but I'm not going to explain it in this video because that's not the purpose. That amount goes into Schedule A. Okay. And this amount of itemized deductions goes into Form 1040 right here. So it reduces your taxable income, and then it gives you the result of a lower tax amount owed. So that's it. There is more to it than this, but this is just to introduce you to the concept. I may make more videos making more detailed explanations. Maybe I organize a webinar with some colleagues. By next year, there's going to be more information about this, so I may talk about it in more detail. But for now, this is just to make you aware of it. I hope you get, if not all of your money back, most of your money back. This theft loss applies not only to FTX and Alameda. If you suffer any other kind of loss in crypto or not crypto, if you invested in a scheme and it turned out to be a scam, these procedures might be available to you. So send me an email and we can talk about it. Here is my email again. Thank you for listening. Please like the video and subscribe to the channel and share it because, for two reasons. One, maybe somebody will have a use for this information so they can reduce the tax bill. And also, I would like to get more clients. Thank you. Bye-bye.